Welcome to this deep dive. Today, we're jumping straight into the recent first quarter 2025 earnings call from Posit Systems Corporation.
That's PUSA-BET for most folks listening.
Right, PUSA-BET. We've gone through the whole thing, the transcript, the call itself, and, well, our goal here is to sort of cut through the corporate speak.
Yeah, get right to the meat of it.
Exactly. Pull out the most important takeaways, help you get up to speed quickly. All right, so let's unpack Q1 2025. First glance, you look at top-line revenue.
And it was down a little bit sequentially.
Okay.
Compared to Q4 last year.
Yeah, just slightly down. But like you often find with these calls, that's definitely not the full picture.
Not at all, because you dig just, a tiny bit deeper.
And you see some really quite strong points, especially on the profitability side.
That's exactly it.
Where,
while revenue dipped, adjusted gross margin percentage actually went up quarter over quarter.
and not just up, but
To an all-time high for them. 65%. That's pretty significant.
okay, wow. And year over year, compared to Q1 last year.
Even better story there, looking at the key adjusted metrics, really strong growth.
Okay, hold on. Before we get swept away by the good stuff, let's tackle that revenue dip first. Why did it go down sequentially? What was the reason they gave?
Yeah, good question. Management was pretty clear on this. They said it wasn't really about losing business or demand falling off.
So not a core business issue.
No, they framed it as a strategic choice. They were migrating from one payment processor to another one during the quarter.
Ah, okay. A processor switch. Why do that if it hits revenue?
Well, the goal, they said, was actually to improve the overall gross margin dollars they make from payments and also reduce risk.
I see. So kind of a short-term pain for long-term gain situation.
That seems to be the idea. Trading a small temporary dip in the top line number for hopefully better margins and less operational risk down the road. And you can sort of see the immediate effect of that focus, right, in the margin numbers.
The 65% you mentioned?
Exactly. It climbed from 64% in Q4 2024 up to 65% in Q1. And yeah, they made a point of saying that 65% is their best ever.
So it shows that strategic focus is, well, yielding something tangible already.
It appears so, but the numbers that really make you sit up are the year-over-year ones. Q1 24 versus Q1 25.
Okay, let's hear.
Adjusted gross profit, up 9.4%. Solid.
Decent growth.
But here's the kicker, adjusted EBITDA. Now that's your earnings before interest, taxes, depreciation, amortization. Basically core operational profit.
Right, a key metric. What happened there?
It grew by a massive 93.5% year over year.
93.5. Wow, that's huge.
Right.
What does that actually signal when you see EBITDA jump like that? Especially now.
That's a great question. Basically, that kind of jump suggests serious operational leverage is kicking in. Meaning their costs aren't growing nearly as fast as the gross profit is. They're getting much more efficient.
Ah, okay. So they're better at turning revenue into actual operating profit. Exactly. Compared to a year ago, much better. And in this market, where profitability is such a struggle for so many,
Right.
seeing almost 100% year-over-year growth there, that's a very positive sign about their financial health improving, their efficiency.
Okay, so profitability looks quite strong then, especially the year-over-year trend. What about cash? Always crucial. How's the cash position?
Right. So the call did mention a slight decrease in available cash in Q1 compared to where they finished Q4 2024.
Okay. Why was that?
They gave specific reasons. One was making a final payment on a legal liability, basically settling an old debt.
Okay, clearing the books.
Yeah. And they also gave small salary increases to non-executive staff, like a cost of living adjustment.
Sensible. Anything else?
They also mentioned continuing to pay down aged payables, so catching up on older bills a company owed.
So these sound like specific, maybe one-off or planned uses of cash, not the business hemorrhaging money.
That's how they presented it. And this leads to probably one of the most important points from the call.
Which is, despite those uses of cash, they stated they were cash flow positive in Q1.
Ah, positive.
And maybe even more significantly, they expect to remain cash flow positive in Q2, the current quarter, and for all future quarters.
Really? That's a big statement. Moving to consistent positive cash flow.
It's a huge milestone, yeah. It signals the business is now generating enough cash from its day-to-day operations to cover its costs, moving towards being self-sufficient financially.
That cash flow point is definitely key then. Just quickly, before we move on, they talked about using non-IFRS measures, right? Adjusted revenue, adjusted EBITDA. Can you just give a quick refresher on what those are?
Sure. So these are metrics companies like PUSA-BET use internally, and they also give them to investors as extra info.
Supplemental information.
Exactly. They aren't standard accounting measures like under IFRS International Financial Reporting Standards.
Okay.
Management finds them useful because they can strip out certain things, maybe one-off costs or non-cash expenses like stock compensation, to get what they feel is a clearer view of the core business performance.
Underlying trends.
Right. But it's important. As the company always says, they aren't a substitute for the standard IFRS numbers, just another lens to look through.
Got it. Okay, shifting gears a bit from the pure financials. What about the operational side? Did they highlight specific areas where things are going well, growth areas?
Absolutely. They spent a fair bit of time on their point-of-sale POS business.
The systems retailers use at the counter?
Exactly. They said they onboarded over 50 new locations onto their POS platform just in Q1.
50 in one quarter. That sounds pretty good.
Yeah, and they made a pretty direct claim about how they're doing competitively.
Oh, what did they say?
They stated their POS product is winning out against competitors. They specifically named Dutchie and some other providers.
Winning against Dutchie, that's bold. To name a competitor like that on an earnings call.
It is. They framed it as their product, features and value resonating with customers in that specific POS market.
Did they back it up with examples, or was it more of a statement?
It was more of a direct statement on the call itself, asserting they're actively taking share from named players. Definitely a key message they wanted to get across. And beyond the POS side, they also talked up their e-commerce platform.
Right. That's newer for them, isn't it?
Yeah. Beta launch was only early last year. But they said it's growing fast, actually exceeding their own forecast.
Exceeding forecasts already. Okay.
Yeah, they seem to position that as a really key product for their future growth. Overall, the vibe from management on the call was, focus on efficiency, financial stability.
Trying to project steadiness.
Sort of. They painted a picture of PUSA-BET being in a pretty solid position, especially when you compare it to some of the chaos and headwinds in the broader cannabis industry.
Right. It's been tough out there.
Definitely. And they also dropped a hint. So they have a number of initiatives and projects kind of in the hopper.
Ah, suggesting more news is coming.
Sounds like it. Expect announcements in the coming months was the implication. So if you're looking at this from an investor angle, what does it all mean?
Yeah, what's the signal here?
Well, I think it signals pretty consistent execution on their strategy. Yes, there was that revenue dip from the processor chain.
But they flagged as strategic.
Right. But alongside that, they showed they could really improve margins, profitability, especially year over year. That's number one. Number two, the operational wins. They talked about the POS growth, the e-commerce traction.
Those are presented as the engines for future growth.
Exactly. The underlying drivers that should support revenue and profit down the line, even with this quarter's specific top-line impact. And honestly, that strong year-over-year profit growth and getting back to positive cash flow.
Those are really important points right now, aren't they?
Hugely important, especially with capital markets being so tight for many in this sector. It suggests they're moving towards a more self-sustaining, maybe more resilient business.
Did they give any actual guidance for Q2 or the rest of the year?
Not formal quantitative guidance, no. But they did say they expect a slightly better Q2 for adjusted gross margin dollars and EBITDA. And overall, the tone was very optimistic.
Optimistic, but no hard numbers. Got it.
It's also kind of interesting. The call was pretty brief. And there were actually no questions in the Q&A session at the end.
Make of that what you will, I suppose. Okay, fascinating breakdown. Thanks for walking us through all that detail. Now, before we wrap up, we have our final segment, and let me be crystal clear here. This next bit is purely for discussion, for informational purposes. It is absolutely not financial advice.
Definitely not. Don't trade based on this.
Please don't make any investment decisions based on what we're about to discuss or anything else in this deep dive.
Yeah.
Okay, disclaimer firmly in place. But just for fun, taking some of those specific points from the call, especially the claim about winning against Dutchie in POS, let's try to brainstorm a hypothetical trade idea, something maybe a bit outrageous but plausible based only on the call commentary, like you were pitching it to an investment committee.
Okay, all right. Investment committee hat on. Given PUSA-BET specifically said on the call they're winning against competitors like Dutchie in the POS market.
Right, that direct claim.
And you combine that with their focus on efficiency, the margin improvements, getting to positive cash flow, you could maybe construct a speculative paired trade.
A paired trade. How would that work?
The idea would be, okay, you take a bullish position on PUSA-BET, You're betting that their execution in POS and e-commerce, plus the better financials, drives them forward.
Okay, betting on Posit-BET's success.
Right. But simultaneously, you take a bearish position on the competitor they name, specifically Dutchie.
Betting against Dutchie, based purely on Posit-BET saying they're winning.
Based directly on that claim from the call, yeah.
Yeah.
The thesis isn't about the whole market. It's a very targeted bet that specific competitive dynamic is real and will impact Dutchie negatively in the POS segment. You're betting on a relative performance shift within that niche.
Wow, that is definitely specific, and relies heavily on taking their claim at face value.
Oh, absolutely. It's loaded with risk. I mean, you've got broader industry stuff, regulations, other company factors for both. Tons of things could make it go wrong. But the idea itself is pulled straight from the competitive commentary on Posit-BET's call.
Interesting. And yeah, definitely highlights how you might try to translate call specifics into a market view, even if it's super speculative. Okay, so let's wrap up this deep dive into the Posit-BET Q1 2025 earnings call. What were the main takeaways?
I'd say a strategic revenue dip tied to a payment processor move.
But offset by
An all-time high adjusted gross margin and really strong year-over-year growth in adjusted profit metrics like EBITDA.
operationally.
Key wins highlighted in POS, including those claims about beating competitors like Dutchie and fast growth from their newer e-commerce platform.
And the big one?
The shift to being cash flow positive, with the expectation that continues.
So what does this picture suggest for you, the listener? It seems to show a company really zeroing in on profitability, on efficiency, making strategic moves, even with short-term impacts, and seeing growth in specific product lines.
Yeah, a focus on execution.
Which leads to our final thought for you to chew on. With positive cash flow now reported, and this momentum they're claiming in specific areas like POS and e-commerce, can Posit-BET use that focus on efficiency, those niche market wins, to build a more resilient business? One that's maybe a bit less tied to the wild swings of the broader industry.
Something to consider, definitely.
Indeed. Thank you for joining us for this deep dive. We hope breaking down the call like this helps you get informed quickly.